KYC, you must know what is KYC. Being a banker, most of you must be aware of this term also, know your customer. What is KYC and why do we need this particular exercise to be performed in the banking sector? First of all, you must be very aware that what type of customer is there in your bank, what kind or what type of customer is there who is presented in front of you as a customer for a particular service. He or she wants a particular service, but what you need to identify is the type of that particular customer. Whether you can accept the particular individual as the customer or not, it will highly depend on the KYC, know your customer guidelines. Along with that, KYC norms are also being taken very seriously by the RBI so that we can identify the AML activities, anti-money laundering activities, along with terror financing. So AML along with the TF, as we call the terror financing. So these are the two most important roles what KYC plays in a particular banking sector. Today, we will be talking about 3 such policies, or you can say procedures, via which you can align your bank's policy with the KYC norms as being prescribed by the RBI. We'll be starting off with CAP, that is Customer Acceptance Policy. How and when and which customer you will accept, which individual you will accept as your customer. Customer identification procedures, via various mechanisms you can assure the particular bank that yes, we can keep this individual as our customer because of 1 or 2 identity proofs. Customer due diligence process, how we will ensure that all the background checks have been done, and finally we will be accepting a particular individual in our banking system. So this is the agenda for today's lecture. First of all, KYC operational norms, where is this written? Whether it is in the Banking Regulation Act or the RBI Act, or Government of India has enacted some different act, or it is specifically in your board policy. Respective banks have their own board policy. So whether it is written there only, let us just see. The RBI has laid down the certain operational norms for banks and other entities regulated by it. Fine. And under which direction? Under the Master Directions KYC, Know Your Customer 2016. And what is the specific section it is mentioned? It is mentioned in section 35A, Banking Regulation Act 1949. The provision of these directions also apply to the branches and majority owned subsidiaries located abroad. Now some people will ask that whether it is applicable for the foreign banks which are located in India. Then again, yes, because they are located within the territory of our country. So the law of our country will be there to govern their activities. In case there is a variance in KYC AML standards prescribed by the RBI, and the host country regulates, the branches or subsidiaries of the bank are required to adopt the more stringent regulation of the two. If your particular bank, supposedly SBI, is there in Frankfurt, now one question will be there in the minds of those bankers who are posted there, that whether the RBI norms will be applicable for AML KYC or the Frankfurt's norms will be there. So answer would be that more stringent one, whether it is the foreign lands law or your country's own law. Branches or the subsidiaries in India of foreign incorporated banks may adopt the more stringent regulation of the two standards prescribed by the RBI and their home country regulation. Again, vice versa, it is applicable. Now, next thing which is to be dealt is the CAP, Customer Acceptance Policy. One thing you must be very clear in your mind, that once you start PPB, once you start studying the principles and practices of banking, you will start from scratch only. You should not be very much having the background, whatever you have studied in your, you can say, banking life, but you should start from scratch, as in you must be very aware that what all topics are important for my exam, not keeping any kind of inhibitions in your mind that we have studied in our training that these are the norms, but in the PPB subject we are studying it differently. No, whatever is being written in the book, that you should follow. So Customer Acceptance Policy, CAP, although being a banker you are there in the practical application of this particular exercise, But again, these norms you must know. So CAP, the first thing which you must know is that no account is opened in anonymous or fictitious or Benami name. What is Benami name? Whether it is just a term coined for the anonymous entities or something else. If anybody who's watching this lecture wants to share his or her opinion, you can also share that. So let me just be very clear that Benami is nothing but a particular type of entity or a company where you do not know about the owner. Fine, his or her name, what is the occupation, how the background is being checked, everything, nothing you know about that person. Financial transaction or property holding where the beneficial owner, the person who actually owns the asset, is not a registered owner. That is the keyword, registered owner. The registered owner's name, all the details are not present with you. It's a transaction conducted under another person's name, often a friend or family member, to hide the actual owner. These transactions are illegal in the India under your Benami Transaction Act 1988. Now, these types of information are very important for the exam. Question can be directly asked that under which act we prohibit any Benami transaction, any Benami person who is there to open an account. So, the act will be Benami Transaction Prohibition Act 1988. Next thing which is important to know here is that no account is opened where appropriate customer due diligence measures cannot be applied. Now there are two types of you can say measures which can be taken. One, in the case where you do not know about that person, then some other mechanism will be followed. Second, you know about the person, but for XYZ reason, the due diligence cannot be carried. Like the customer or the individual which you want to accept as the customer, he or she is not willing to disclose the information. Fine. So whether it is any of those two cases, you cannot just accept the individual as your customer. No transaction or account-based relationship is undertaken without following the customer due diligence procedure. That is the most important one. All of you who are working in the operational side, operations, in the banking operations, they must be knowing that there are various segments while opening the account, and you have to check all these. CAP is one of them, customer acceptance policy and the customer due diligence. The report, where does this report goes from your branch? Can anybody tell me? If you are watching this in the recorded format, you can just answer in the comment section that this CGD report is generated to send where, whether it is the regional office, the zonal office, the head office, local head office, or the corporate office. Do let me know in the comment section. Fine. The circumstances in which a customer is permitted to act on the behalf of another person or the entity is clearly spelt out. Now, what do we mean by this? This is again a very important scenario where there are certain circumstances where the customer is permitted to act on the behalf of some other person. Fine. But he or she is not available in front of you while opening the account or while maintaining such type of account. You must be pretty much cautious that whether this can be accepted or not. To ensure that the identity of the customer does not match with any person or entity whose name appears in the sanction list circulated by RBI. RBI keeps on updating this sanctions list. What is this sanctions list? Nothing but the terror financing activities are being put under one particular domain, and that particular domain is just a name away. That is the sanctions list. List of the individual suspected of having the links to the terrorist activities. Then you have to verify the PAN obtained through the facility of issuing authority. Who is the issuing authority? Your income tax department under the ITA Act. Then to verify the digital signature of e-document given by the customer. You should be able to verify every e-sign, every e-document via the signature. Otherwise, they are not valid. To mandatory information should be obtained for your KYC purpose during onboarding or periodic updation should be specified in the KYC policy. So not only while opening the account but also maintaining that account or updating the account details, you must have the KYC details of the customer. In case of joint accounts, CDD procedure is to be carried out for all the joint account holders. Question can be asked from this particular statement that while updating the joint accounts in a particular bank, whether we need to update a single individual's KYC or the entire joint account holder. So the answer will be all the joint account holders. Next is your CIP. The next one under the KYC norms, the KYC guidelines is your CIP, Customer Identification Procedure. How you will be identifying that a particular individual will be a fruitful customer for your bank, long-term customer for your bank. It includes identifying and verifying the identity by using the reliable independent source documents, data, information. Customer identification is required to be done in the following cases. How you will ensure that the information which is available is independent? Via various documents. You have n number of documents via which you can prove that you are this particular individual. All those documents will be used under the CIP. So what all cases are there? While opening an account or establishing the account-based relationship, you must establish the CIP procedures. Undertaking the international transfer for the non-account holders. If a doubt arises about authenticity of an existing customer or adequacy or correctness of information about the customer. So whenever you feel that certain transactions are being done in the name of the particular individual and he or she is not directly linked with any kind of such transaction, then you must be very cautious, you must be very alert and look into the matter via CIPs. Selling any product including third party products, loading, reloading of the prepaid or travel cards for value of over rupees 50,000. This question can be asked. The limit that is your 50,000. So just wait a second. Okay, so selling any product including the third party products, loading, reloading of prepaid or travel cards for the value of over rupees 50,000. What is the limit? Beyond 50,000. Less than 50,000, it is not necessary. Carrying out a transaction or series of connected transactions valuing over rupees 50,000 for a walk-in customer. So 50,000, you can say twice or thrice this particular limit will be there under the CIP process. When there is a doubt that a customer or the account based or walk-in customer, whatever you want to study, is intentionally structuring transaction below the threshold of 50,000. Now some customers will be very aware about this limit of 50,000. They will do what? They will try to surpass or bypass this particular amount via multiple transactions amounting to more than 50,000. So all these cases must be studied under the lens of CIP. Okay. Any kind of doubt you can just ask me. Any doubt, any doubt. Fine. Next is your CDD, that is your customer due diligence procedure. It includes the customer identification, also obtaining the information about the customer's location. All these services, the location, the activity, they are a part of your CDD, customer due diligence, and the purpose for which the banking services will be used. These 3 or 4 core areas will be defining your CDD process. Depending on the risk perceived from the customer, information on the nature or business activity, what kind of business activity he or she is taking up, the location of that particular individual, mode of payments, whether it is cash or not. Once you see that majority transactions are being held under cash or are being given via cash only, then you must be very cautious. Volume of the turnover. What is the turnover? What is the amount of that turnover for a particular individual? Social and financial status also you must factor in, but most importantly for a banker, mode of payment will redirect you to the CDD process. All these collected completing the profile of your customer. Now, what are the documentation? Now, see, this particular documentation is important for the examination. Question can be asked from here. When we talk about for the individuals, what is the documentation? First and foremost, the Aadhaar number. If any benefit or subsidy from the central government, you want to receive these benefits, then you must be providing the Aadhaar number. That is a must do. You cannot skip the Aadhaar number if you want to enjoy the benefit of a particular subsidy via central government. A certified copy of any OVD containing details of the identity and your address. So any OVD, what is OVD? Can anybody tell me that whether PAN card is under the OVD section or not? We will be looking into that also, don't worry. Next, an equivalent e-document of any OVD e-document, plus you must verify the document as well. The customer signature, digital signature must be there when we are seeking the e-document. Do remember that. For certified copy, original documents are to be verified, and self-verified copy duly authenticated by the officer of the bank stating verified with original is to be obtained. Now, many of you might be working in this particular profile only, wherein you are I would say the teller, and the another person will be the authorizer of account opening. So the authorizer must put a stamp in which it is written verified with original and sign thereon. Now this verified with original is also required for any loan. Fine. If a particular loan is being sanctioned via the branch visit, then you must authorize via verified with original stamp on the KYC documents, all those documents which you have taken from the customer for the purpose of KYC. Okay. So do remember, this is also important for your daily banking plus for the exam as well. In case of NRI or the PIOs, the persons of Indian origin, copy of document certified by any of the specified authorities are listed below should be obtained in original. So these are the authorities, the authorized officials of overseas branches of the SCBs, scheduled commercial banks, that is all the branches or the branch heads of these branches which are located abroad, registered in India. Branches of overseas banks with whom Indian banks have relationship, all those tie-ups, there also this particular documentation will be taken. Notary public abroad, then court magistrate, judge, Indian embassy, consulate general, because they are the representatives of whom? Of our country only, where the non-resident customer is there. For e-document, again, digital verification must be there. That is the norm, that is the most important norm, I would say. Again, this is for the individuals, for the individual entities. Now, there will be some sole proprietor, some proprietor, and one person company will also be there. For our examination, what is important is the documentation of for individuals and the sole proprietors. We will see that also. Next, under the documentation only, what all must be included? One recent photograph where an equivalent e-document is not submitted. So one recent photograph, if you want to take, then you can. But nowadays in the banks, we see that under the online services, photograph is being taken by the camera in real time. Earlier, it used to be a norm, a very important norm, where the photograph you must paste it on the account opening form. But now it is not that important. But that does not mean that you should not take it. You must have it. Permanent account number or Form 60 as defined in Income Tax Rules 1962 or its equivalent e-document. Again, PAN is important when we talk about the documentation for the individuals. Such other documents, including in respect of the nature of business or financial status of the customer, or equivalent e-documents thereof as may be required by the regulated entities. So any document which is being prescribed by the regulated entities, and they cannot just freely say that I want your ration card. No, not like that. They must be backing their claims with the RBI guidelines. If they feel that yes, RBI has told us that you can seek this particular application form or this particular documentation, then they can ask the customer. What all regulated entities are there? One is your scheduled commercial banks, excluding the RRBs. Then SFB, small finance bank, payment bank, large urban cooperatives. This is very important. Normally we think that REs are not there when we talk about the urban cooperatives, but they also fall under the REs. Large non-banking financial companies, NBFCs, then credit information companies, the CICs are also there, and AIFI, that is your All India Financial Institutions. One more thing, that only the large NBFCs are there, not all. Do remember this fact as well. Large urban cooperatives as well as large SCBs. So this was the documentation for your individuals. Now what is the OVD? Fine, what do we mean by OVD? Following documents have been notified as the OVDs for your KYC purpose. Now the question which I asked you was whether PAN is included in this particular list or not. So the answer is in front of you only, because OVDs include what? Passport, DL, then Aadhaar number, voter ID, job card, and your NPR, that is National Population Register. They will be issuing one letter. That particular letter will fall under the OVD. So PAN is not there under this particular list. And who discloses this list? RBI keeps on updating. And right now, when you are seeing this video, passport is under the latest guidelines, that you can seek passport as OVD, and many customers are now willing or happily providing the passport as well. Fine. Now CDD for the sole proprietary firm. I hope that from whatever we have studied, you are making sense that all these things are important for your examination as well as your banking, the daily banking. Okay, now let's move on to the sole proprietary firm. Here the documentation will be somewhat different. Why? Because we are talking about the proprietorship. We are not just talking about the individuals. So any two of the following documents must be obtained under the KYC norms. Under which head? Under the customer due diligence. So there are various documents which you can obtain, but while opening up the account or establishing a formal relation with any sole proprietorship, you must have two of the below. Fine. Minimum two you must seek, you must have any two of the below mentioned documents. First one being the registration certificate of the firm. Then you have certificate or the license issued by the municipal authority under Shop and Establishment Act, that is SEA. Sales and income tax returns. So normally in the banks we take what? Registration certificate, the RC, and your sales and income tax return, and we just maintain the relationship with the proprietorship firm. Otherwise you can take the certificate from your municipal authorities also as the official document. Then CST, VAT, GST certificate, provisional or final. Now mostly we try that we can have the final certificate, but if the customer is credible, the individual is credible, we can think of taking the provisional as well. Certificate or the registration document issued by sales tax, service tax, professional tax authorities. Then you have the IEC. Now here the importer exporter code, normally in the banks this particular document is not being taken. Why? Because most of the people are very I would say they do not want to share this particular document, but in the list it is provided. Importer exporter code issued by the proprietary concerned by the office of DGFT, or your license certificate of practice issued in the name of proprietary concern by any professional body incorporated under a statute. So law must be backing this particular authority who is issuing this code, IEC. Complete income tax return, not just the acknowledgement. No acknowledgement letter will be acknowledged while you are maintaining the relationship with the bank in the name of your sole proprietor, where the firm's income is reflected, duly authenticated or acknowledged by the income tax authority. That is very, very important. See, this income tax return which is mentioned here also, you must have the complete income tax return, not the acknowledgement letter. Utility bills like your electricity, water, landline, telephone bills, all these things are acceptable. Any two, not one, any two. Do keep this thing in mind. So in total we have what? 1, 2, 3, 4, 5, 6, 7, 8 documents. Out of these 8, any two will do, any two. Okay, it will be revolving or hovering around these 4 topics. First of all, we'll be understand the different types of deposit accounts. We'll learn about various deposit options available, plus the operational instructions. The real life examples can be asked in the examination from this particular topic. IIBF has this habit of asking case studies in PPB exam. So directly operational instructions can be asked by the IIBF via certain case study. So to gain insight into the procedures for dealing with deposit accounts, these are the operational instructions. Next, we have legal norms and interest rates. In order to understand these legal framework and interest rates applicable to the deposit accounts, we must be very serious while studying the unit number 5. Lastly, as I was telling you, the unclaimed deposits is also one of the topic. But the most important part will be the DEF account. What do we mean by DEF account? We'll be studying under the unclaimed deposits, and the objective of this unit, why it is discussing the unclaimed deposit, to familiarize yourself with handling of cooperative accounts and unclaimed deposits. Okay, so basic objective of the entire unit number 5 is this, but we will be specifically focusing on the deposit accounts, and that too only the current accounts in this particular lecture. Then we'll be shifting focus towards the nominee facility and some unclaimed deposits also. First of all, let's start our discussion with the salient features of deposit accounts. Now, as you know, that the types of accounts are only two, that is your demand and term deposits. When I talk about demand deposits, as the term suggests, that you can demand them anytime. Anytime, I don't mean that 24 hours, but any business hours, any time between the business hours of the bank. So demand deposit can be withdrawn on demand. And what types of accounts are there which are holding these demand deposits? The current account and your savings account. Next, we have term deposit payable after a fixed period, a fixed time period. It can be fixed deposit or your recurring deposit, or the RDs as we know them. Fine. Next is deposit forms. Accounts can be individual, joint, proprietorship concern, companies, trusts, many accounts can be there. Many kinds of deposit accounts can be there. Then operation. The operational aspects are directly linked to this particular topic of operation. The accounts are operated by single users or multiple users with specific instructions for operation. Whether you require the signature of all the participants in that particular account or only the Karta will be signing. KYC compliance adherence to your know your customer policy norms is mandatory. So these are the certain salient features of deposit accounts. For our examination, what is more important? The salient features of current account and your saving accounts. So let's start with the current account. Who all are the users when we talk about the current account? So primarily it is used by the traders. In your branches also, you must be knowing that the businessmen, they prefer this type of account, that is current account. Business people, entrepreneurs, they maintain the current account. Generally, there is no interest paid on the current account balances. Generally, the operations, large number of transactions are permitted. That is the only reason why businessmen often they go towards current account rather than the savings account, because transactions are huge and they are permitted here. Account holders, they can be opened by individuals or the business firms, business companies, the trusts, associations and societies. Whether ATM facility is available for all of them? No, it is available only to the individuals. Now there are certain restrictions also. Not all the individuals or not all the parties can open current accounts. Which are those parties who are restricted for opening the current account? Minors, they cannot open. Illiterate persons, generally not permitted. Then blind persons, directly not permitted, and Pardanashin women. So basically, if you cannot ensure the KYC of a particular individual, that is Pardanasheen woman, there you need to have two witnesses always. Blind person, again some assistance is required. Illiterate person, the signature is an issue. Minor accounts, the age factor chips in. Next we have withdrawal restrictions. No restriction on the amount to be withdrawn or the number of times withdrawal can occur. There is no restriction at all. Minimum balance, the banks, they often stipulate certain minimum balance requirement. So overall, when we talk about the current account, what is important for our examination, what IIBF can ask, you must see all the topics which you are studying with the lens that what IIBF can ask. So when we are discussing this, what are the points where IIBF can create a question? Question can be created here. ATM facility for individual account is available. Fine. It can confuse you by giving n number of options, but the correct answer will be only individuals. Restrictions in the current account, for 4 options will be given. 5th option will be all of the above, like that. So not only you should just attend the session, in your mind you should play a picture that if the examiner is to set a question from this particular slide, then what all type of questions he or she can set. Next is TOD, that is temporary overdraft. Specific provision exists in current account rules permitting ODs. So OD limit is there in current account. Temporary or irregular OD or the overdraft, they are given to good and trustworthy customers against their written request. Normally the banks refrain from this, but in the books you can say yes, it is one of the mechanism which is set up for current account holders. P notes, promissory notes, a written request for TOD and demand promissory note should be furnished by the account holder. So these are the requirements if you want the temporary overdraft in your current account. Now let's see, after the current account you will have the savings account, you will have the basic SBAs, plus some term accounts will also, term deposits will be also discussed in the book. But now we will be focusing on the inoperative accounts. One type of deposit account we have seen, that is your current account. Now we will be focusing on the unclaimed deposits, because the guidelines which are there for your unclaimed deposit, the inoperative accounts, chances are high that question can be asked from there. So an annual review of both the saving bank account and the current account in which there are no operations. If nobody is operating that particular account, you should know, being a banker. So annual review is there. Mark this, highly important. Question can be directly asked. The saving bank and current account should be treated as inoperative or dormant if there is no transaction over 2 years. Greater than 2 years, it is inoperative. Debit as well as credit transactions induced at the instance of customers as well as third party should be considered. Okay, so normally as a customer, what we think that you have to debit only or you have to do the credit transaction only, but what is the actual norm when we are studying this inoperative accounts mechanism? Debit as well as credit transactions induced at the instance of customers as well as the third party will be considered. Mark this, very important. Then service charges levied by the bank or interest credited by the bank should not be considered. Okay, debit credit in the form of service charges or the interest credit will not be factored in when we are specifically mentioning or specifically saying that this particular account is inoperative or not. There are instances where the customer has given a mandate for crediting the interest on TDs to saving bank account. So obviously it will not be considered while having the final definition that whether this particular XYZ account is inoperative or not. Okay, so once we have created the base that this particular type of account will be inoperative, then you have to display the list of inoperative accounts or the unclaimed deposits as well for the banks. As a general proactive measure, the banks are required to display on their respective websites the list of accounts which are inactive or inoperative for 10 years or more. Okay, not beyond 2 years, but beyond 10 years. So this type of data can be asked in the examination. The publication of these particular accounts on the website will be done after how many years? So 10 years or more. It must contain only the names of the account holders, obviously, and the address. In case of the entities, the name of individual authorized to operate the account should also be indicated. So who all can operate the account? This is another, you can say, subtopic of your operational guidelines chapter. But for today, we'll be sticking to the inoperative account or the unclaimed deposits subtopic only. No other details should be included in the list, be it the account number or you can say the SIF number. No, nothing like that. The information on the purpose of claiming the unclaimed deposit or activating the inoperative account and the necessary forms, documents for claiming the same should also be given. So online mechanism must be established so that the customers can have a convenient method to again reoperate their accounts. Now under these unclaimed funds, one important fund is your DEF, that is Depositor Education and Awareness Fund. Recently, this year only, I think that RBI has released the data that maximum DEF funds have been inculcated within its own setup by the public sector banks. So why it is important? In 2014, RBI established the DEF fund under the provision of Banking Regulation Act 1949. Do remember this. The banks are required to transfer the credit balance in any account or any deposit in a bank remain unclaimed or inoperative for more than 10 years. Okay, this particular amount will be transferred to this DEF fund. Fund is intended to be used for the purpose of education. Educating whom? Let's see. The amount is credited to the fund within 3 months from the expiry of your 10 years. So 3 months is the time period within which the amount which is held in that particular bank account will be transferred to the DEF fund. Utilized for promotion of depositors' interest as specified by RBI from time to time. The depositor can claim the funds deposited or any other unclaimed amount to operate the account even after the amount has been transferred to the fund. The bank will pay the amount to the depositor or the claimant and claim the refund of such amount from the fund which is being held by RBI. Okay, now next important point is the nomination facility. So we have picked, or you can say hand-picked, only those important topics which will act as the first instance for all of you who are starting your unit number 5. So all the topics are being covered, but with an overview of that particular topic, not in-depth analysis is being made. For that, you can always join our sessions which are held on the learning portal of Adda 247 or the application that is Adda 247 again, and thereon you can join those sessions while by enrolling in various courses. Right now we are conducting the PPB classes in our success batch which is live. Today we had one orientation class which is live on YouTube also. If you have not seen that video, you can gauge the level of interaction we have in the actual classes by watching that particular session and make up your mind that why you should join our classes, the live classes, the paid classes, I would say. Fine. So nomination facility, the Banking Regulation Act 1949, it was amended by section 37 of the Banking Law Amendment Act 1983 by introducing new section 45ZA to ZF. Now these sections are highly important. Question has already been asked in the previous cycles. Okay, and again IIBF can answer questions. Now this particular section was added for nomination facilities to the bank's customers. in respect of the deposit account, safe deposit and your safe vault lockers. The relevant rules framed by the central government with reference to the above sections are termed as Banking Companies Nomination Rules 1985, which will determine the nomination facility in the banks. So there are three terms which you must remember. One, Banking Regulation Act 1949. It will ultimately lead you to the nomination facility. But how it was amended? It was amended by the Section 37 of your Banking Laws Amendment Act of 1983. That is the second important thing. Third important point is the introduction of the sections 45 ZA to ZF. So in the nomination facility, there are certain forms. Okay. So three forms are of interest for our examination. So form DA1, what does it pertains to? It pertains for the nomination by depositors. So depositors, if they want to nominate somebody, form DA1 is used. Then DA2 for the cancellation of the nominators or of the nominations by the depositors. Then form DA3 for variation of the said nomination by the depositor. So one, you initiate the nomination process, DA1. You terminate or cancel that process, DA2. DA3 for certain modifications. Fine. Okay. So in the nomination facility, there are certain salient features in front of you. One by one, let's discuss them. So the nominee shall, on the death of sole depositor or all the depositors, entitled to receive the money in the account of the depositor. That is so obvious that once the death of sole depositor is there, nominee will be having the amount in his or her account. Nominations are not permitted in respect to the depositors held in any representative capacity, such as director, secretary, partner, karta of HUF. So all these designations, they cannot claim the funds and say that we are the nominees. No, because it is not permitted. If any customer does not wish to make nomination for any personal reason, an endorsement may be made in the nomination form. If there is no nominee added, then the process will start from scratch only. Nomination can be given only in the favor of an individual and not a firm. Do remember this, very, very important. There are n number of cases lying in the courts. Only one individual can be made a nominee for the particular deposit account. Then separate nomination in respect of each deposit account must be made. So if there are separate deposit accounts of one particular individual or under one CIF, then for every deposit account you must have separate nominations. Now, once you know the type of deposit accounts, you know that what do we mean by the unclaimed funds, you know about the nomination facility. Now let's move on to the missing customer. If a particular individual is missing, then what to do? The FIR and the non-traceable report issued by the police authorities along with the letter of indemnity must be forwarded to the respective banks. And the claims, the unsettled claims will be done in respect of missing person. It will be governed by the provision of section 107, 108 of IEA, India's or you can Indian Evidence Act 1872, dealing with the presumption of continuance and presumption of death respectively. Fine. So continuance and death, if we talk about, so 107 talks about the continuance and 108 will be talking about the presumption that the person has died. Death can be presumed only after the lapse of 7 years. Mark this, very important. In the missing customer, if you want to say that a particular customer is missing and now he or she has died, that particular claim you can make only after the 7 years have lapsed from the date of reported missing. That is this particular report. Nominee or the legal heirs have to raise an express presumption of death of the depositor before a competent court. So nominee or the legal heirs, if they want to have those funds which are there in the presumed dead customer, then they must go to the competent court. and make their claims. Starting off with who can open these accounts. Okay, we will be indulging into the discussion from who can open these accounts, that is the simple eligibility, who all are eligible for these accounts. Fine. NRE account you can have for the NRIs, for the persons of Indian origin, or the OCIs. Individuals, entities of Bangladesh, Pakistan nationality ownership require prior approval of RBI. So if you are an entity, or for that matter an individual from Bangladesh, or for that matter in Pakistan, then you require the approval of RBI, that you must know. For NRO account, any person resident outside Indian land, or for that matter the country, other than the person resident in Nepal and Bhutan. So that is one first norm. Individuals or entities of Bangladesh, Pakistan nationality or ownership, as well as erstwhile OCBs, they require a prior approval from RBI. So if the individuals or the entities are having certain connection with the Bangladesh or Pakistan, be it the citizenship for that matter, or the occupation is going on from those countries, then definitely RBI's approval is required. Similar pattern for FCNR account is followed as of the NRE account. So same eligibility is there, nothing has changed for FCNR. When we talk about the deposit, what kind of deposit is there in NRE account? It is foreign currency. For your NRO, it will be Indian currency, and the FCNR account will be having the US dollar, then you have the pound, then Australian dollar, SGD, and so on. Japanese yen is also there. So a gamut of various, you can say, currencies are there when we talk about the FCNR account. Next, what about the withdrawals, or you can say from the Indian land to the foreign land? What kind of withdrawal can be made? So Indian rupee is the you can say withdrawal denomination for the NRE and NRO account. For FCNR you will have the foreign currency. Simple. Why? Because directly the basket of currency is there in the FCNR account. Next, the taxation in India. When we talk about the NRE account, so it is not taxable in the country. Interest income is taxable, which is there in the NRO account. And when we talk about the FCNR account, again, not at all taxable in your country. So whatever denominations are there, they are free from tax. Repatriability. So whether you can repatriate a particular sum of the money or not from the NRE account. So deposits and interest earned are fully repatriable. When we talk about NRO account, up to 1 million USD per financial year. So there is a cap for the repatriability of the accounts when we talk about the NRO account. What is that limit? 1 million US dollar. For your FCNR account, the deposits and the interest earned on them are fully repatriable. So you can use directly, fine. Exchange rate risk. When we talk about the foreign exchange risk, so due to the currency fluctuations, that particular risk is there. When we talk about the NRO account, there is no foreign exchange risk as such, and similar thing happens for your FCNR account. But when we talk about the joint account, whether NRE account holders can have this facility or not, so they can use this facility of joint account for all the three, be it the NRE account, for the NRO account, or for that matter your FCNR account. Next, when we talk about the type of account, so what kind of accounts or what types of accounts can be opened under the NRE category. So savings account, you have current account, term deposit, as well as your RD, that is recurring deposit. Same pattern is followed for the NRO accounts. And when we talk about the FCNR account, only term accounts will term deposits will be there. So whenever you are studying the different types of accounts for the foreign entities, or for that matter, if you want to learn the operational guidelines, you must start from the difference. So various parameters are there via which we have studied these three accounts. and automatically the questions are coming in the examination from these difference points only. Okay, nobody will be asking you beyond the difference points. Max to max, what can happen? One case study can be there based on various you can say types of accounts. Okay. So permitted accounts in India for NRIs and person with Indian origin. You have the NRE, that is non-resident external rupee account scheme. So NRE account. Then you have foreign currency non-resident account bank scheme, FCNR. Lastly, non-resident ordinary account scheme, that is NRO. The difference we have just seen. When we talk about a further elaboration in your non-resident external or the NRE account, you will find the same things which we have just discussed, that the types of accounts will be saving bank, current account, or for that matter RD, or you can say term deposit. Joint account for the 2 NRI, 1 NRI and 1 RI FNS. The resident relative can operate only as a power of attorney holder. So when we talk about the joint account, so 2 NRIs can have 1 account, and when we talk about the other category, it will be the NRI will be clubbed with RI F and S. Operating mode, the residents are allowed to have the transaction through the power of attorney. We can say the withdrawals, remittance, and you can say the investment also, they are permitted via POA. The resident POA holder is not allowed to do some activities which are, you cannot open the NRE account. Repatriate, the repatriability of this account is restricted to the holder only, not the POA. Make the payment as gift to the resident, that also the power of attorney holder cannot do. Funds, if you want to transfer to another NRE account, again the power of attorney holder is having the prohibition on that particular activity. So transfer of funds is also not permissible. Fine. When we talk about the permitted transaction in the saving or the current account, so all those important you can say parameters are being discussed here. Most importantly, what kind of remittances? So remittances to India in any permitted currency can be done. The interest payments, your current income in India, transfer from any other NRE or FCNR account can also be done. But when we talk about the refund, this is a common question in the mind of bankers, that whether refund of application or the earnest money purchase consideration made by the house building agencies or sellers can be done or not. Yes, this refund is applicable, or it is fully permitted in the case of credits. What about the debits, local disbursements? Then you have the remittance outside India. Okay. Along with that, the transfer to NRE or FCNR account of any person eligible to maintain such account. Now there are certain schemes like fixed deposit tenor. Fixed deposit is there. What about the tenor here? The minimum tenor is 1 year. When we talk about the interest on deposit, so the rate of interest for the saving bank account will be the domestic rate, and when we talk about the term deposit, it will differ as per the tenor. Okay. So I hope that NRE account, along with that the basics of other 2 accounts, are clear to you till now. Next, when we talk about the tax exemption, so NRE deposits are exempt from wealth or income tax. Payment on death of the depositor, the primary holder or the depositor, you can say, on the demise of an account holder, the balances can be transferred to a non-resident nominee. So nominee must be there in any type of account, be it your individual account or the entity. Remittance by a resident nominee outside India for meeting any liability of the deceased or similar other purpose requires RBI approval. So these kind of activities will require the approval of RBI. You can not just assume that yes, you are permitted to do that. You must have the approval by the regulator. Loans against the NRE deposits. The loans can be granted in India by the AD against the NRE deposits, but lien is not allowed on NRE saving bank account. Okay, so lien is not allowed, that you must remember. But yes, the aggregators can have the loans distributed to the NRE deposits. Prohibitions on the use, they cannot be used for re-lending or agricultural or plantation activities, or for that matter investment in real business, real estate business. Why it is prohibited in real estate sector? Reason is simple: in order to prevent the money laundering activities. So basics first, the cash management, it refers to what? It refers to the collection, concentration and disbursement. So you will be collecting cash from the cash hubs, as we call them, or for that matter the chest branches, so collecting from there. But ultimately the first disbursal of the cash will be from the regulator, that is the RBI. Fine, RBI, then you will collect it, concentrate it, whatever amount you want, and keep in the bank, in the bank's branch. After that you will be disbursing that particular cash. So management refers to all these steps. Only then you will say that we are talking about the management of the cash. It encompasses the level of liquidity, management of cash balance and short-term investment strategies as well. So whenever cash is flowing across the market, across the financial sector, it involves certain inhibitions from the financial intermediaries. Certain regulations will be stipulated for that particular cash flow by the regulator, and certain profit motive will be there from the various institutions. So everything is being clubbed together and formed as the aim towards managing the cash. Next, when we move on to the fundamental objective, it is optimization of this liquidity through improved flow of funds. So cash flow is happening, and the regulator will be regulating this particular flow of funds while sitting in the offices, but it has already created one mechanism via which these funds will be regulated, or these funds must flow. Only when they are following those rules, regulations, it will be allowed by the regulator to do so. Otherwise you won't be able to transact any kind of business which involves cash. Objective of cash management system is to improve the revenue, maximize the profit, minimize the cost, and establish efficient management system to assist and accelerate the growth. Growth acceleration of what? Growth acceleration of the GDP. Fine. Whenever we talk about cash, it is an instrument via which you can create various assets. Ultimately, though, it's a capital. You have the capital in the form of rupee. If you have it in the form of cash also, you will be doing what? You will be investing that money. Once you invest that money, then only you will reap the benefit. Otherwise, though, if you are talking about money itself, you have your salary on a stipulated time period, on a stipulated day of every month. You are just spending that cash. You are not saving, you are not investing that. So long-term benefit you cannot reap of the cash, or for that matter money as well. Next, when we talk about the development in the cash management, so the cash management has changed significantly over a few decades with the various reasons, but majorly two reasons are stipulated by the banking institutions. First, there has been added upward trend in the interest rates that increase the opportunity cost of holding cash. You want to hold the cash, why? In the bank accounts, because you will be earning certain interests. But right now, when we talk about the Indian markets, they are highly volatile. Fine. Nobody wants to keep the cash in the bank account because the awareness, the level of awareness is rising as compared to the previous decade when it comes to the investment opportunities. Second, the technological developments, particularly computerized electronic fund transfer mechanism. So cash management overall, now you do not need to manage the cash per se, you have to manage the funds. That will be a better way to put it out. So the companies in such as IBM, General Motors, and you can say HP, Hewlett Packard, all, even the manufacturing plants are having various motives to hold the cash. The big companies, why we are telling you these names? Because they refer to the big companies, and most of the payments are made from the cities where manufacturing occurs, or else from the head office. What is the reason why we are discussing this? So that you can understand the cash flow. Somebody sitting in USA, fine, they are remitting certain amount in, let's say, not Russia, USA won't remit the amount to Russia, but somewhere in the European nation, fine, European or Western Asia, fine. So this particular mechanism is ensured via the amount which a particular party wants. This party won't be able to have a particular profit for which it is transacting with this party if it is not holding any cash. So cash or the value, if it is zero, if it has been nullified by various activities, you won't be able to maintain the profit. And when the similar system is being replicated by the big companies here, it applies to them as well. So in short, when you talk about the development in the cash management, it must include the inflow as well as the outflow of the money, and profit maximization must be happening via this particular activity. Next, when we talk about the cash management system, let's quickly see the types of these services. Cash collection service is there, direct credit by the fund transfer is also there. Let's see the cash collection service. Banks have implemented various customized cash pickup solutions to meet the specific requirements of the customers, and it will do what? Why it is being preferred? Minimization of the operational risk. You just want the cash, here you go, here is the amount you wanted. Reduction in the cost. Security is there. Earlier it used to be secure, right now so you don't know what will happen. Increased efficiency is also there. You need not to wait for your payment, you just can have it right now, right away. Direct credit by the fund transfer. This offers management of payables in respect of supply chain management, overseas remittances, salary payments and statutory payments. Mostly when we talk about the exact benefit, who has the exact benefit or the most beneficial, you can say, owner or the entity for the direct cash transfer or the direct remittance is the international party. Nobody can ever imagine the fact that the payment has been made digitally in 1900s. In 1900s, 1910s, nobody was even thinking of that particular mechanism, that cash can be the source of funds and you can have it right away within a few minutes. But now when we talk about the overseas remittance, they can happen within a blink of eye. Next we have check or demand draft. These types of arrangements. So when you talk about the DDs, payable at par, checks issued by the CMS, the clients are by branches across the country on presentation for the payment. So cash not only in the form of physical money, not only in the form of your digital transactions, but from paper also, fine. Check is what? It is a paper currency. So DD, check, all these services are being ensured via various instruments. NEFT payment, electronic channel, again digitalization is there for the bulk disbursements as well. Not only for the individual but the bulk disbursements, you can use these electronic channels. Next, when we talk about some other aspects of your cash management system, you have the check collection system also. Somebody has given you the check, now you want to clear that check. So local and upcountry clearing solutions are also being inculcated over a period of time. NACH payment facility for periodic dispersal. You do not want to have any kind of worry when it comes to the monthly payments. From here you will be having the periodical disbursements or the receipts of various amount, whatever is being ensured or is written in a particular contract. Auto sweeping facility, pooling of funds at desired locations. So various norms are there when we talk about in the banking system. Supposingly somebody is there having a particular saving bank account and wants to inculcate a particular habit of saving. So they can give you an intent that after rupees 50,000, if more is being credited in my account, then kindly make an auto sweep and give that particular amount as a FD, as a fixed deposit.